Hi everyone, this is the Preparing for 2022 Paper 3 video. This is the last in the series because this is obviously the last exam. And so we're going to follow the same kind of process that we did for Paper 1 and Paper 2. So we're going to go through a breakdown of the content covered in Paper 3, an overview of how the paper is structured, which is important because Paper 3 is different to Papers 1 and 2. We're going to talk a little bit about the research section as well, which is another big difference between Papers 1 and Paper 2 and Paper 3. Paper 3 has a pre-release. And then I'll give you some key tips for success, and then we'll go through each of the topics and try and figure out what kind of questions they might ask and what kind of content you need to make sure you know before this exam next Thursday. So this paper is different for a few reasons. The first is it's the only paper that requires content from all 4 themes. So there's not very much from each of the themes there, 2 or 3 topics from each of them, with the exception of theme 2 there where there's 4 topics. In fact, all of that 2.5 unit, which is a bit of a challenge, but the idea behind this normally is by the time you get to this paper, you've already revised themes 1 and 2 and 3 and 4 from papers 1 and 2. A little bit different this year, obviously, with the advanced information telling us what topics to revise. Nonetheless, hopefully you've been preparing for these for quite a while. So from theme 1, you've got pricing strategies, you've got recruitment, selection and training. From theme 2, we've got capacity utilization, which was in today's paper 2 paper. And we've got economic influences, legislation and the competitive environment. So that entire section on external influences, basically. You've got investment appraisal, which we'll talk about quite a lot here because that's going to be a big factor in how well you do on this paper. And we've got shareholders and stakeholders, and then from theme 4, protectionism, and then the assessment of a country as a production location. Now, we'll talk about this in a few slides' time, but one of the big differences in paper 3, aside from the pre-release, is that you don't have any 4-mark like calculation questions. So you will have to do calculations as part of an essay, and all of the information that is suggested in the quantitative skills suggests that that's going to be an investment appraisal calculation. So you need to be prepared for that. Now, as I mentioned, the structure is a little bit different. You don't have 4 markers. In place of those 4 markers, you get an 8 marker. Now, this creates a few challenges because I actually think 8 markers take probably longer to write than 10 and 12 markers because it requires 2 fully developed peach paragraphs. You don't need to put a huge amount into your howevers. You just need to have howevers to provide balance to get evaluation marks, to get the top level marks on that 8 marker. But the key thing here is going to be that focus on timing. So 8 markers, 2 peach paragraphs, and it's always going to be assessed to. And if it's benefits, for example, you need to make sure you also put a drawback in your however. So even if the question just says benefits, you still need to consider the other side of the argument in your however points. For the 10 and 12 markers, 1 peach paragraph with a developed however. There's been loads of questions in the comments asking about the difference between 10 and 12 markers here and other videos that I've done. This year I realized that the additional kind of peach paragraph, so I was getting students to write 1 peach paragraph and then to do another peach paragraph, maybe without the however, to get that added analysis, because a 12 marker requires a little bit more analysis. You get an extra analysis mark and an extra evaluation mark. But the time it was taking to write that paragraph and the impact that that was having on students rushing later on and maybe not actually having a great second point in the first place, I just found that it wasn't really worth it. So by all means, if you've got loads of time and you work into time really well, chuck a second paragraph in there, and that might help you get to the extra mark or so. But generally speaking, I think if you've got 1 peach paragraph and you basically kind of turn your however into a second one, like make that a developed however, that's enough. As for the difference between a conclusion and a judgment, if you've got a good it depends on point or short-term, long-term point, it's worth chucking that in even if it's only on a 10 marker, because that might get you that extra evaluation mark. And maybe that means with a slightly shorter structure, you're not going to get necessarily 12 out of 12, but you can definitely get 10 out of 12 at least. And so, I mean, that's what we're aiming for, 10 out of 12. If you got that on every single 12 marker, you'd be in a really good position. And obviously our 20 marker is probably the easiest one, so you've had loads of experience with these as well. 2 peach paragraphs, 1 for each of the 2 options. So, I talked through this before on the previous videos. Hopefully you've already seen those and they hopefully helped. There's been quite a lot of really nice feedback, so that suggests that they've been fairly helpful. There was also a little bit of feedback. One of my students sent me a TikTok where there was a suggestion that I was already, like, if people were watching this on 1.25% times speed or 2 times speed, that I was already talking that fast. Well, there's a lot to get through, and I didn't want to keep you here for like an hour and a half or do an hour and a half worth of YouTube videos. So you find the speed that works for you, but I'm not gonna change that due to TikTok pressure. So we've got the five key kind of attributes of a good business student and a good business exam. Make sure you've got your knowledge. Make sure you know your key terms for all these topics. Hopefully I'll cover quite a few of these now. Make sure you know your structures. We've just gone through those. If you do that, then 2, 3, and 4 you should get, because if you've got your structure, then you should have balance and you should be using the case study. And then the last thing, timing, that is really, really, really important. I think this is the hardest paper for timing, simply because it takes longer to write an 8 marker than it takes to write 2 4 markers, especially if it's a calculation question. You can get through it really quickly. So be really, really careful about the timing on this paper. I know probably quite a few students will do the sections backwards and start at the 20 and then work their way back. So at least that way, if they run out of time, you run out of time on an 8 marker rather than a 12 marker. Or obviously, last thing we want to do is not have enough time to completely finish a 20 marker. So that might be something you consider, but just make sure you're watching the clock and paying attention to the timing as you go through. Now, paper 3 also has a pre-release, and I haven't really given a huge amount of focus on this to my students. When we did this, when we introduced the pre-release at the very start, this is before the advanced information, we did quite a few big research tasks where we started looking at like news articles around the industry that we've been given. But I haven't really done a huge amount since, and the reason for this is, at the end of the day, when you get into the exam next Thursday, you're going to get a case study like you would any other exam. So you could have done absolutely no research and you'll still be in a pretty strong position to answer the questions well, because it will give you the case study with all the application you need. However, obviously there is some benefit to having done a little bit of research, or at least having an awareness. So the context for this exam is international sports events industry, and then the UK sports retail businesses operating in this market. And it gives you some bullet points on the left-hand side to focus on. I don't really think there's a real great deal of interest there, because we know what the topics are. So for example, where it says human resource management, well, we know the human resource question is going to be about recruitment, selection or training. So I don't think you're going to get many clues from there. The one I would pay attention to though is central and local government. Now there's a bit about influences further ahead, and there's a bit about stakeholders, and perhaps that's where the government influence comes in. And so an economic influence is quite heavily linked to government and how government benefits. So we'll talk about some of those things as we move through, but I don't think there's a huge amount of point in worrying about those things. In the past few years, they've typically split section A and B into industry or kind of wider context, like macro in one section, and then focusing on like one particular business in the other section. So assuming that they do that this year as well, I would expect section A is probably going to be about some sort of specific sporting event. And I've put some examples there: the Olympics, the Euros, the World Cups, like big international events. It could be the Commonwealth Games, which is happening this summer. So there's a bunch of big examples that it could be about. That being said, it could be about something quite much smaller. It could be about like any kind of golf tournament or the Tour de France or anything like that, really. And I don't think it's really worth spending a huge amount of time revising all of those. But I think if you have a look at those three, then it's worth having a sort of half an hour glance at those three in particular events. The World Cup coming up, obviously, the Olympics. We've had the Olympics in the UK in the last 10 years, and the Commonwealth Games obviously is going to be happening in a couple of weeks. So it's worth having a little bit of a look at those, but I wouldn't worry too much about that. Section B, if that was the case for Section A, Section B would probably be about a specific business within that industry. So I've given some examples there. It could be like a sport events company. It could be a booking company. Sports retail, it says sports retail businesses. I mean, retails are quite a broad term, but in particular, it could be like a sports clothing or equipment firm. And I wouldn't expect... I mean, Nike was in paper 1, wasn't it? And I think Sports Direct was in a paper like last year or the year before. So probably not going to be one of those. But I don't think there's a great deal of value in researching those, because they could be big or small. It might be, a local retailer in a small town or something like that you'll never have heard of. And so you just use the case study for that. However, what I will do is when we're talking about the topics, if I can see like something that might clearly link towards this, I'll mention that. I've got a few sort of yellow boxes on the slides that will give you a few little clues about how there might be a link between that topic and the research point. I mentioned earlier, you won't get a 4-mark calculation question, but you will be asked to do calculations as part of at least one of your essays. You'll know which one it is because the question will say using the data in extract, blah, blah, blah. And sometimes it even tells you exactly what to calculate. the most obvious candidate out of all of the topics that we've got is investment appraisal. I mean, I can't think of how you would answer an investment appraisal question without investment appraisal data. And I'm willing to bet that they want you to calculate and interpret that data. So you're going to have to do the calculations, and then you're going to have to actually interpret the calculations and make sure you know what they mean so that you can use them as part of an argument. My advice would be, and I can't stress this strongly enough, do loads and loads and loads of investment appraisal practice questions so that when you actually, come to the exam, you can do the calculations really, really quickly and then use them in sort of like your normally structured answer. The key thing is doing your calculations as quick as possible so that you can spend as much time as possible writing your answer. If you don't do the calculations, that will severely limit your marks. Your application's coming from these calculations. So make sure you can do the calculations and you know what they mean. Now, to be honest with you, if I'm being blunt, on a normal year where students don't have advanced information, they have to prepare for investment appraisal even if they don't know if it's going to come up. Like, they might spend hours revising it and it might not even be on the exam. You know it's going to be on the exam, so you really have no excuse not to be prepared for it. I'll attach a document into the comments somewhere. I'll try and I'll put it on Dropbox or something like that with just some practice, some practice investment appraisal sheets which I've used with students before. So well worth going through them. So make sure you can do all the calculations. Make sure you know what they mean. We'll come to this in a bit more detail later on because I'm going to show you some practice ones. So the first topic on the list is pricing strategies. Now, I've put a bunch of pricing strategies up on the screen here. We've got a few, and they can be categorized into two main categories. You've got new and existing, so as in whether these are for new products or for existing products. So price skimming and penetration pricing are for new, and competitive pricing and cost plus pricing are for existing. And then they're also targeting different ends of the market. So some will target product differentiation, some will target cost competitive. So if you're not quite sure what I'm referring to there, I'm referring to Porter's generic strategies, where he argued that some products, if they've got a differentiated feature, they'll have a different pricing strategy than a company that's trying to keep their prices as low as possible so that they can compete on price. Some businesses want to compete on price, some businesses want to compete on high quality. So price skimming would be for the product differentiation, and this is where you start with a high price with an innovative product. Over time, you reduce it as the product becomes less innovative and new competitors bring out products on the market. Penetration pricing is where you go in with a price lower than the competitors already in the market, or certainly a little bit lower, if not the same. And that's going to link more closely to the cost competitive. Competitive pricing is pretty much the same thing as penetration pricing, really. You're going at a sort of similar level or a slightly lower level to competitors. And then cost plus pricing, you would do this if you've got something unique about your product. You can basically just figure out what your production cost is and then add a markup. Now, there's a few different pricing strategies, but they depend on those variables. So make sure you can pick up from the case study what type of business or what type of product is being referred to. Now, if it's, for example, in the sporting event section, then you would probably expect, if it's like a limited attendance sporting event, limited level of supply, then you might see that might be more differentiated. For example, World Cup tickets are going to be very differentiated. If it's for a retailer, it could be either. It could be high differentiated or low cost. You think about the differences between businesses like Nike that are very, very differentiated and businesses like Sports Direct who are just trying to keep their prices as low as possible so that they can attract that lower level of income section of the market, or people who just want value. So it could be a 20 marker, for example. Could be choosing between two pricing strategies. That would be quite nice. Could be an 8 marker with 2 benefits of a particular strategy. So just pay attention, because there's a chance that one of those key terms comes up specifically in the question. Now, the second topic is recruitment selection and training. There are loads of specific terms here that could come up, because this topic is actually basically 3 topics. You've got recruitment, internal and external. You've got selection, and then the different kinds of ways you select, the likes of interviews and using person specs and job descriptions. And then you've got training, like on-the-job and off-the-job training and induction training. So make sure you know all of those definitions. Make sure you know the benefits and the limitations of all of them. So why a business would use on-the-job versus off-the-job, why a business would use internal recruitment versus external recruitment. So I just think, you think about the events, for example. If there are any events, then these events are going to have to bring in temporary workers. And when they're bringing in temporary workers, they're going to have to recruit. And so there's a really obvious link there to recruitment. But there's also a fairly obvious link to training as well, because when you get these employees, they need to have training. It's probably going to have to be quite quick so that they're ready for the event. So all of these events require additional staff. So it wouldn't be a surprise to see that question being in section A, because it's quite obvious that there's a link between those events and the need to recruit, select and train. So I would be paying attention to, and I said this with the first one, the pricing strategies as well. These topics aren't very complicated in terms of theory, but there's a lot of key terms you need to make sure you know. So I think it could be quite specific, it could be broad. So be prepared for all eventualities, but look for clues in the case study about why they would choose a certain type. For example, do they need experience? If they need experience, maybe they're going to go externally to maybe an agency where they've already had experience with that. Do they need highly skilled staff? Because that might then suggest that they require quite a lot of training. If it's not a very highly skilled job, then it might require less training. So there's a bunch of different contextual reasons in the case study why these might be more beneficial or not. This topic came up in paper 2, so that's why I waited until after paper 2 was complete to record this video, because I wanted to see what they did with the capacity utilization question. Now, I wondered if it might be a calculation, because there obviously isn't going to be a calculation. Well, it's not going to be a 4-mark calculation question in paper 3. It wasn't. The question actually in paper 2 was explain one effect on EasyJet PLC of the reduced capacity utilization of its aircraft in 2020. So it's going to be an essay question. It wouldn't surprise me though if it did ask you to do a calculation in it. So make sure you're prepared for that calculation. I'm sure you will be, because you were prepared for it for paper 2. Yeah, so same kind of advice really. If it's going to be an essay question, but it's possible they ask you to calculate something. So make sure you're prepared for that. Make sure you understand the benefits of having a high capacity utilization versus maybe a slightly lower capacity utilization, and the impact that has on costs. Although that is, of course, the crux of the question that we saw in paper 2. It was effectively about reduced capacity utilization should lead to higher unit costs, basically, or higher costs. Now, for the sporting event, it could be about sporting arenas and venues. Now, the difference here is typically we would say to a business doesn't really want to have 100% capacity utilization. But in a sporting event where you've got, if it's Wembley, for example, and you've got 80,000 tickets, you want to sell every single ticket. So anything less than 100% in a sporting arena is considered to be negative. Effectively, all those fixed costs are being spread out over less ticket sales, and so therefore the unit costs would increase. So it could be something like that, but again, have a look at what the case study is telling you and make sure you're prepared for the calculation, because you might have to calculate something, and if you do, maybe it's going to be about comparing that to an ideal figure or comparing that between different options. 2.5.1, economic influences. It's not really a surprise that this is coming up, because an event such as a World Cup or a Commonwealth Games has such a clear impact on the economy of that country, of that local area, that city or that region. So it really is, it's actually probably, if you were asking me to guess which topics would have come up on this paper, this would have been one of the ones I was thinking of. So it mentioned earlier government, and this is where the government bit could come in. It could be about the impact on a country or a region's economy, and therefore obviously the impact that will have on the government in terms of things like, creating employment, and then the tax that will generate as well. So there's a section on government there, how governments collect revenue through taxation and government spending. But also in the economic growth section, unemployment levels are measured. One of the big priorities for the government is that they have jobs created, because jobs don't just create tax, but they also create spending in the economy and the impact that has on other businesses. So while I've put on there exchange rates and spiced, and while I've put on there inflation, I think more likely it's going to be about the impact on the economy generally. But for example, if it is a section on, if it's on the kind of business side of things rather than the event side of things, it could be a business that imports or exports products, and therefore make sure you're aware of exchange rates and the impact on exports and imports of exchange rates changing. So make sure you're aware of those key terms and those concepts, and make sure you're aware in which these economic factors and how they affect businesses, both positive and negative. It's also worth just bearing in mind the link to stakeholders in terms of government and local community. Maybe that's a shared topic there, who knows. But it could be something like assess the impact of whatever the event is on the local area. It could be the impact of something like exchange rates on a business, in which case make sure you know your key terminology and make sure you look through the case study to find out how they, for example, if it's exchange rates, look for anything about imports and exports. But yeah, I mean, obviously any kind of event is going to draw a huge amount of potential tourism to the area. It's going to create temporary jobs. It's going to create spending as all of the tourists and the visitors visit the city or the region. And when they're there, they're spending their money on restaurants, and they're not cooking in their hotel rooms, are they? They're spending the money in hotels, spending their money in restaurants and bars, and obviously merchandise. So loads of local businesses will benefit. And then you can just see a huge positive impact on the local economy. The second topic in 2.5 is legislation, and there's 4 main areas of legislation. So, I mean, these are the 4 that I teach anyway: employee protection, consumer protection, environmental, and competition. There's a few little ways that this could come up, to be fair. One thing that's worth paying attention to, though, is think about the sports events and think about legislation, especially when we think globally, because there's been loads of controversy around Qatar and the World Cup in the winter and employee protection. There's quite an obvious link there because that's been a really, really prominent news story. Qatar and the sort of the building process for the Qatar World Cup has been atrocious, really, in terms of human rights standards, in terms of obviously legislation's different in different countries, and quite often is sort of a lower standard than it is somewhere in the developed, like the UK, for example. And so you've seen hundreds and hundreds of people dying at work to build these stadiums because they've had no employee protection. And so that's quite an obvious link that could come up in terms of a sporting event, but it could be anything. It could be something about consumer protection when you think about the businesses that are selling to customers and making sure that they're, treating customers fairly and selling goods as advertised and what have you, and fraud. So make sure you're aware of those. Basically, make sure you're aware of the different categories of legislation and make sure you know which each one stands for. A question's likely going to be specific. So we've seen loads of questions before, like assess the impact of employee legislation on a business, or assess the impact of consumer protection on a business. So look for that and make sure you're aware of what kind of things that might include, and make sure you can find those in the extract. It could even be potentially a 20 marker where you have to choose between which of the two types or groups of legislation are more important. I think that's maybe a little bit more unlikely, but certainly something worth being prepared for. 2.5.3 is quite a vague topic. It's basically all about competition and market size. So I don't think you're going to get necessarily a question just on this. I think it's actually going to be probably linked to another question. We've got 8 questions, we've got 10 topics, and this is an obvious one of those topics that could link to somewhere else. So just make sure you're aware of like the impact of competition on a business within a market. You'll see examples of competition within a market in an extract. And also just make sure you're aware of how markets grow and change in size depending on a bunch of factors. So I don't think this is going to be a specific question. If it was, it could be something along the lines of assess 2 impacts of competition, or assess the impact of increased competition, or something like that. So have a look at the case study. See if you can identify whether the market is growing or shrinking, how big the market is, how much competition is in the extract, are any competitors mentioned. And actually, if it's sports retail, I'm willing to bet you know quite a few of the businesses in that market anyway. So you might be able to mention those even if they're not necessarily mentioned in the case study. And that might impress an examiner who recognises that you know a little bit about the market as well. Now this is the big one. This is investment appraisal. So I'm going to go through the theory behind this first and foremost, and then talk about how this might be looking in a question. So effectively, investment appraisal, I'm going to do this basically as almost like a revision thing, whereas the other ones I've kind of just talked through some bullet points and said maybe you want to go and research these things. With this one, I'm going to do it in a little bit more depth, because I think this is going to be, for a lot of people, this will be the one that they're most frightened of, and to some degree it could be what kind of makes your exam paper do or die, because if you can do really, really well on this, it just sets you up for a really, really good mark. So investment appraisal is a tool that businesses use when making decisions. Effectively, businesses have got to make decisions that likely involve a huge amount of money. So this could be going forward with a proposal or a decision between more than one different project. And, we can't always do everything. We've got certain amounts of money. We've got certain priorities. So in order to make these decisions, businesses will do investment appraisal to give them some kind of numerical data that will tell them whether the idea or project is worth doing. So you've got 3 different calculations to do here. Payback period, which is how long it takes for the project to recover the initial investment. So if the project costs £5 million, how long does it take to get our £5 million back? Average rate of return is similar to a profit margin in a way. It's what percentage of the initial investment cost, though, do we get back each year as profit? So there's two parts to this calculation, but I'll go through them in a moment. And then net present value. Net present value takes into consideration the fact that money that we don't receive until a few years from now is not worth the same as if we had that money right now. So if I offered you all £1,000 right now or £1,000 in 3 years' time, you would be well advised to take the money now, because then you have the opportunity to do something with it. Whereas if you don't take the money until 3 years' time, at the end of the day, you're still going to get £1,000 in cash, but you'll have lost out on the opportunity to have done something with it. So a business saying that they're going to make £500,000 in cash inflow in 3 years' time, that's not the same as them having £500,000 now, because they can't do anything with it when they're not going to get it for 5 years' time. So those are the kind of theories behind the three topics. And these are the three calculations. So payback period, when looking at the table, I'm going to show you an example of this. The last negative cumulative cash flow amount divided by the cash flow in the following year times by 12. 12 gives you the amount of months. And we'll talk about that again when we do the example. Average rate of return, there's two types of this calculation. I'm going to give you the full version, but it's basically net return divided by the number of years of the project, divided by the initial investment cost, and then to get that as a percentage, we times it by 100. You might see average net return at the top, which is basically just net return, so how much you make over the entire project, divided by the number of years the project lasts. And then for net present value, you just do the total cumulative net present value figure, and if that's positive, we're in a decent spot, and if it's not positive, then we're not in a great spot. But we'll talk about this after we've done a set of calculations for it. So payback period and average rate of return I've done here. So you would see, for example, you might get a table. It might not be as full as this, and obviously there'd be sections that might be missing. For example, you might be given the cash flow, you might be given the inflow and outflow. You are unlikely to be given the cumulative cash flow. So that's just your running total. So work out your cash flow if you're not already given it. And then you just do a running total there. So we start with minus 1,500 because that's, let's say if we assume that that's 1.5 million, that's the cost of the project. And that is year zero, because year zero is basically the start of year one. So year one represents at the end of year one. In this case, we've made a cash flow of £180,000. So we've had £180,000 more than we've had going out. So therefore, our cumulative cash flow, we're still down by 1.32 million. So we keep going through that process, keep adding them together. And then eventually what you'll see is at the end of year four, we haven't paid back. We still have to make £210,000 to reach the repayment point. But in year five, we do make that. We make 540,000 in year five. We only need to make 210,000. And so therefore, at the end of year five, we've made a net return, our final cumulative cash flow, that's our net return there, of £330,000. So how do we work that out? Well, first things first, we know that we haven't paid back after 4 years, but we have after 5. So we know that the payback period happens between year 4 and year 5. So it's going to be 4 years and something. So we need to work out what the something is. At the end of year 4, the last negative cumulative cash flow figure is 210, meaning at the end of year 4, we still need to make £210,000. In year 5, we make £540,000. So really what the question is how far into that £540,000 do we reach 210? So we do 210 divided by 540. And if we were working that out as a percentage, we'd times that by 100, but we don't want to work it out as a percentage. We want to work it out in months. So if you times it by 12, that'll give you the answer in months. So 210 over 540 times by 12 is 4.6, which means the answer is 4 years and 4.6 months. Now there's some downsides to this. Number one, 4.6 months, that kind of makes an assumption that you receive your revenue at the exact same amount every single day, and we all know that that's not how business works. So one big limitation of investment appraisal of payback period of the entire thing really is that's assuming that over that 4.6 months we would have to receive the exact same amount of revenue each day on average to get that, to make that figure accurate. So it's not going to be accurate at all, but it is still well worth doing because it's a projection tool. So 4 years and nearly 4.5 years basically of a 5-year project. We'll talk at the end about whether that figure's any good or not, because it really depends on the business. So that's payback period. For average rate of return, we take our net return, which is that final figure at the end of there, which is £330,000. If we want to find our average net return, we're dividing that by 5. And then we're going to take that average net return and divide that by the initial investment. So that net return, 330 divided by 5, that's how much basically how much profit we've made, how much return we've made per year. Average rate of return is how much of our initial investment have we received as a return per year on average. So we would take that 330 divided by 5, divide the answer by 1,500, and then times that by 100 to get a percentage. And the answer should be 4.4%. Now, pay attention to what the question asks. I would always do 2 decimal places unless it rounds to 1, obviously, or 0. Quite often in these, they'll give you fairly easy calculations because they know they're going to ask you to write an essay on it. So I know, for example, we've seen one in the past where the payback period, you didn't even have to calculate the months because it rounded to exactly 3 or 4 years. So they might do something nice with the figures because they know that they're also going to make you write an essay. But be prepared to do these calculations anyway. And obviously make sure you can calculate your average rate of return really, really quickly. For net present value, this one's a little bit more complicated. There's 2 methods of calculating this. You can either, first of all, we take our cash flows from the and this might be the table you get. We apply the discount factors. So the discount factors effectively say, as I mentioned earlier, the further away we get from now, future cash flows aren't as valuable. They're not the same value as, like that 540,000 in year 5. That's not the same as having 540,000 now. So we're going to times it by the discount factor. So you can see that discount factor is 0.621. That basically means that money in 5 years is actually worth 62.1% of what it would be worth if we had it now. So that £540,000, although when we receive it, it's going to be £540,000. If we were to receive that money now, it would be the equivalent of receiving £335,000 now, basically. So there's 2 ways of doing this. You can do the net present value just by timesing your cash flow by the discount factor, and then you can do in the same way we would have done cumulative cash flow for the first part. You can do cumulative net present value, and then your final answer in year 5 will be your final figure. The alternative method is to do just your net present values and then just add them all together and look at the final answer. But if you're going to do that, make sure you put the minus at the start of the minus 1,500 for the investment. Otherwise your answer will be much, much higher than it should be. So the answer there is 173,960 minus. So let's talk about what those 3 answers mean and whether they're any good or not, because being able to do the calculations is one part, but you also need to be able to use them in an essay. Payback period, it really depends. I mean, the first things first is it needs to pay back. So if it's a 5-year project, it needs to pay back within that 5 years. Otherwise, it's absolutely just a non-starter. In terms of how fast it needs to pay back, well, that really depends on the business. The business might prioritize cash. They might need the cash back quickly because they've got other, expenses to pay or other things that they want to do with that cash. If that's the case, if cash is the priority, having a quick payback period might be really, really important. For some businesses, it might not be as important. They might be more focused on their profit. If they're more focused on their profit, then the average rate of return would be more important. Now, there are situations where you might have a really good average rate of return, but a really late payback period. That would only be the case if the vast majority of the profit was made right towards the end of the project. Typically, with an average rate of return figure, the higher the better. And the key thing with this might be you might get a base of comparison. So you might have to compare some bits of data. So look for a base of comparison. Maybe there's 2 projects if it's a 20 marker and you've got to compare one average rate of return to another. If the business is focusing on profits as their priority, you want the higher average rate of return. So 4.4%, that would be considered to be fairly low. So they might have a target of 12% or 20% or something like that. So have a look at the extract and make sure you know what it means. But effectively what we're saying here is the higher that percentage is, the more of our initial investment costs we've made as profit each year. First things first, of course, if it's negative, then you've not made a profit. So that's worse than it being small. But generally speaking, with a profitability ratio, we want them to be a bit higher. For the net present value, I mentioned earlier, we want it to be positive. This figure was a negative. That suggests that, and we know this because of the payback period being 4.5 years into a 5-year project, we make a lot of our money in the future. And so it's actually not really worth it for us. So this is likely to be the big using the data and extract question. We've already obviously talked about that. Make sure you can do the calculations very, very quickly. You need to do the calculations. You might also have to use their extracts as well. So don't assume that all of the information will be in the calculations. For example, if it's a 20 marker, the calculations might give you one of the options. You might need to use an extract for the other options. So The key thing is make sure you can do the calculations and use the data. And if you do that, you should get really good application marks. But you can't just do the calculations and then just, for example, not use them and then not use them in your essay. You've got to make sure you use them. There's no excuse not to be prepared for this. So make sure you know how to do the calculations quickly. Make sure you know what the results mean for the project. And if there is a comparison, make sure you know what you're comparing the results to. I think this is probably likely to be a 20 marker. And perhaps the second 20 marker, quite often that is where the big calculation question is. But that's not always the case, I don't think. So make sure you use the results of the calculations in your answer, use the extracts for the other options, and work quick. You don't have time to waste here. If you just do the calculations, you'll get maybe, I don't know, I think it's maybe up to 6 marks. I can't remember off the top of my head. And if you do the essay without doing any of the calculations, then you're certainly not going to get more than half marks, I wouldn't imagine, because you've kind of missed the point of the test, really. So make sure you're prepared for this question. Like I said, there's a practice kind of worksheet for this. In the comments worth having a look at. 3.4.3 is about shareholders and stakeholders. This one should hopefully be fairly straightforward. I think this might be linked to another question here. It could be potentially a 20 marker where it's stakeholders or shareholders, whether a business should focus on stakeholders or shareholders. So make sure you know who each of their stakeholders are, and make sure you know whether they have control or influence on the business. Very few of them actually have control. Like the managers have control and the majority shareholders have control. And to some degree, you can argue the government has a bit of control, but most of them have influence. And so make sure you're aware of what they want from the business. What do the suppliers want? What does the government want? What do lenders and creditors want? And what do employees want? It could be about the impact on a particular stakeholder of an event. It could be on a stakeholder of a specific sporting business. It could be, as I mentioned, a 20 marker where you have to say whether the business should focus on stakeholders or shareholders. Who knows really how that's going to look, but make sure you know all of those different stakeholders. I mentioned already when we talked about the economy, but it could be about the local community and government and local businesses. And so just be aware of those things when you're thinking about the sporting market. In the theme 4, and there's only 2 topics in theme 4, and we've seen a little bit about theme 4, about this kind of area of topics in paper 1. So for example, in paper 1 we had a bit of trade liberalization, and this one's going to be on the other side of that spectrum. So this spectrum I put in the paper 1 video. Trade liberalization is one perspective where we have kind of free trade and no tariffs or quotas. Protectionism is the opposite of that, where we try to restrict trade, and this is likely going to be through imposing tariffs or quotas. And there's loads of reasons why a country might do this. The main reason is to try and protect certain industries, or try and protect certain businesses and industries from foreign competition. So make sure you understand how tariffs and quotas restrict imports. Make sure you understand why governments want to protect certain industries. I always think about the American car industry when we talk about protectionism, because it provides so many jobs to the American economy, and certainly in certain regions like the likes of Michigan, for example, that it needs to be protected, because if it isn't protected, and foreign businesses can produce cars at a much cheaper level, we might end up finding that our businesses can't compete in the market based on price. And then as a result, we end up finding that our producers can't stay open, and then jobs are cost, and then entire kind of industries can be wiped out, and entire kind of communities can be affected by that as well. So that's what we've seen happen in places like Detroit. So there should be an example clearly in the extract of a protectionist strategy. That's the key. Now, it could be, for example, maybe sporting events are more global by nature, so I think this might be more likely going to be about like a retailer in global markets. With a sporting event, you want businesses all over the world to kind of be involved, because these events are quite rare, and you're all trying to get kind of sponsorship and what have you. So I think maybe this might be more likely to be about a retailer in a global market, so maybe about a sporting retailer in a particular country being able to benefit from protectionism against competition from outside, from overseas. So make sure you know the kind of impacts and effects of protectionism, both positive and negative. Think about things like how other governments might react to protectionism with their own protectionism, and sort of the downsides of that restricted trade and tariffs and quotas, because they tend to work in both directions. And then the last topic in theme 4 and on this paper is assessment of a country as a production location. So there's loads of reasons why businesses choose certain countries for production locations. This will be in the case study. It'll be in the case study. There'll be an example of how a business has, for example, set up production in a certain country. Again, I think this one might be more likely to be in the second part where it's just on a particular business. You've got to be able to identify why they've made that decision. So look at the factors that we've got to consider. The costs of production being lower, that's the most obvious one, because businesses are always trying to, save money, whether that's to make more profit, whether that's to lower prices, again, linking to generic strategies. It could be about labor, and that might be availability of appropriately skilled labor, why a lot of finance businesses are in the UK and London, for example. It might be about the cost of labour. Now, we've seen that with loads of sports retail businesses manufacturing their products in different countries because they can pay staff far, far less than you would have to be paid if you were doing that job in the UK. Think about infrastructure as well, electricity, roads, internet, things that are set up that help the business operate. They're likely to be less developed in less developed countries, but certainly places like China, for example, invest huge amounts of money in their infrastructure, specifically to attract businesses to choose them as a production location. Also think about geography. Now, for example, if it was like a 20 marker, for example, and you're choosing between two potential production locations, you might find that cost might be better in one, but geography in terms of how close you are to the market might be better in the other. The reason it's important in terms of geography is a few reasons. Membership to a trading block, but trading blocks isn't on this paper, so I don't necessarily think that's going to be in there. But the closer you are to a market, the quicker you can get your products out. That's not important in every industry, but in like the sportswear industry where innovation is really, really key and trends are very prominent, it might be really important to get products to customers very, very quickly. Government's also worth bearing in mind. I mean, government's been mentioned as something that's going to be on this paper, so I don't think it'll be mentioned in this context, but it's worth just bearing in mind. Government stability is important, but also think about whether government will maybe try and attract a producer by offering some sort of we've seen this with Ireland and Apple and Amazon, where they've offered kind of tax advantages to encourage businesses to set up there. And maybe it's just actually resources. Maybe there's specific natural resources nearby that are used in the manufacturing. Don't think that's going to be necessarily the case in the sporting industry, but it's worth paying attention to. So that's all of paper 3. Hopefully that's helped. Obviously, if you've got any questions, chuck them in the comments and I will answer as many as I can. Though to be fair, quite a lot of you answer each other's questions, which is quite nice. Hopefully this has helped. Hopefully the last 3 videos have helped. Thanks for paying attention and giving me the time, even if you've given me the time in 1.5 speed, so you've actually given me less time than you should. Good luck in the exam on Thursday, and then good luck with whatever you go on to do next. And yeah, I'll see you around.